Hi there. Welcome to Indian IPO blog. Today, we'll have a look at the latest IPO on the block. Rossari Biotech Limited. So, let's dive in. First, let's glance through basic details of IPO. If we look at the scheduler, Rossari Biotech IPO would open for subscription on Monday the 13th of July 2020. The IPO closes for subscription on Wednesday the 15th of July 2020. The 100% Bookbuilt issue consists of 1,16,82,033 equity shares, each having a face value of 2 rupees per share. The offer would aggregate to 496.49 crore rupees. The price bound for the IPO has been fixed as 423 rupees to 425 rupees per equity share. The minimum order quantity would be 35 equity shares and in multiples of 35 shares thereof. The listing would be made on BSE and NSE. Okay. So that was about the basics. Now, let's have a look at the company profile. Rossari Biotech Limited, incorporated in the year 2009, is a manufacturer of textiles specialty chemicals. It provides customized solutions to the apparel, animal, poultry feed, and FMCG industries. Rossari Biotech operates in 18 countries including India, Bangladesh, Vietnam, and Mauritius. The business of the company can be classified into three main categories. 1. Textile specialty chemicals. 2. Animal health and nutrition products, and 3. Home, personal care and performance chemicals. The company has 1,948 different products range under these three categories. Let's have a look at objects of the issue. The red herring prospectus states that the proceeds from the issue will be used for repayment and prepayment of certain indebtedness availed by the company, including accrued interest, for funding working capital requirements, and for general corporate purposes. Now, this has become pretty much a standard for all, so there isn't much to read about there. Let's move on to the risks factors. 1. COVID-19. While the company has seen a higher demand of hygiene products, there is significant uncertainty on the impact of COVID-19. The growing number of COVID cases always carries a looming threat of a lockdown, although we believe this risk is slightly mitigated since the Silvassa facility, which is critical manufacturing site of the company, also manufactures certain essential products such as sanitizers and disinfectants. While an adverse situation in the form of partial or full lockdown may significantly impact the business, some low-volume operability may still be expected. 2. Reliance on concentrated customers. Revenue from top 10 customers across product categories constituted 53.72% of company's revenue from operations for fiscal 2020. Any loss from these major customers or a reduction in their demand could adversely affect. 3. Reliance on third-party transportation. The company depends on road transportation to deliver finished products to customers. This essentially means that reliance exclusively on commercial vehicles and third-party transportation providers for procuring raw materials as well as for distributing products to customers. Even though Silvassa manufacturing facility is situated close to some of customers' premises, any suspension of transportation due to COVID-19 may adversely affect the daily bread and butter activities of the company. Besides these, the company's offer documents also highlight one more risk, that of cheaper imports of raw materials from abroad. However, we think this may not be that significant given the current backdrop of Atmanirbhar philosophy by Government of India. Okay. So now let's move on to the financials and valuation. If we look at the financials, on a consolidated basis, RBL has shown consistent growth in top and bottom lines, with the bottom line growing from 254 million rupees in FY18 to 652 million rupees in FY20. If we analyze, there are also no major extraordinary items in the P&L during these 3 years, so this growth is pretty much pure. The latest year EPS is 13 rupees and 42 paise per equity share, which means that at the upper end of the price band, the issue is priced at a P multiple close to 32 times. The company's book value as on March 31st was 56 rupees and 48 paise, so the issue is priced at a price-to-book value multiple of around 7.5 times. As far comparative valuation is concerned, the company's red herring prospectus mentions RT Industries, Vinati Organics, Atul Limited, Galaxy Surfactants and Fine Organics as listed peers. All these companies are currently trading at a P ratios ranging from 21 to 35 times. At a P ratio of close to 32 times, we think the issue is pretty much priced at the higher end of the spectrum. However, even if this may be true, we believe that the sound nature of business and a clean track record may make serious long-term and thematic investors go for this IPO as a good bet for a long term. That's it for now. Thanks a lot for watching. Log on to www.youtube.com/IndianIPO blog. Click subscribe button and press the bell icon for latest updates. Thanks again and have a nice day.